Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. I'm halfway through my series of 6 videos. This one's going to be on gold and silver. All of these videos are short-term updates, what's been happening in the last month since the coming storm video that we put out about 22 months ago that talks about big picture what's going on in the economy and the world. If you haven't seen that, you really need to, because it does give you the big picture. It's been incredibly prescient so far into what's happened, and the really big story told in that isn't quite happened yet, although these things are playing out. So that's really important. This is just updates, so you can go watch that video for free with the link right near this video. But now I'm going to talk about gold and silver and what's going on in the world. Interesting, Bill Gross joins the ranks of the silver manipulation noticers. It's been obvious if you pay attention to the gold, particularly the silver market, over the last decade. I've only been watching a couple of years, but it's clearly manipulated. Bill Gross is called the bond king. He's the greatest bond trader. He manages the most bond money in the world, and so it's not really his thing, but he, on a Twitter update, mentioned that manipulation. So just an interesting tidbit. COMEX inventories of silver continue to shrink. So the amount of silver that's backing all the paper in this trading out there in the New York COMEX is shrinking and shrinking. There's less and less actual metal to back up all this paper that's traded. Any other commodity that would have this phenomenon happening, where there's less and less supply, the price would be shooting up. And yet the price right now, as we speak, in silver is much less than it was in April. So it shows you right there the manipulation. New gold and silver exchange in China is actually going to be backed by real metal instead of just paper. So this is pretty exciting. And if it takes off and gets big, that could end the manipulation right there, because they'll have a demand for real metal to back up that paper. It's just started here in the last month, and so far it's not a very big exchange. It's inconsequential, but China is obviously a huge market. If it does grow to the potential, then that right there could end the manipulation and cause prices to skyrocket. Central banks are buying more gold this year than any in the last 40 years. Central banks, they used to be supplying 500 to 1,000 tons of gold per year on the market. So central banks were selling 500 to 1,000 tons per year. So that created a lot of new supply on the market. Well, over the last couple of years, all of a sudden now they're buying 500 tons of gold per year. That's a huge shift. But if you think about the gold market, the new production is only about 4,000 tons per year. So before, 500 or 1,000 of that was coming from the central banks, so it's not there anymore. Now instead, central banks are taking from that. So it shows you how prices are getting driven up. South Korea and Thailand are in the news most recently for buying gold. Asia owns hardly any gold. A lot of the old Western powers like the US, a lot of European powers own a lot of gold. Have for a long time. Asia, as they've grown rich here in the last few decades, have just been storing up on US dollars. They now understand how foolish that has been, and they want more gold. The problem is they can't buy, like China has less than 2% of their reserves in gold, and you better believe they're buying every chance that they get. The problem is they have so much money and there's so little gold in the world that they can only buy tiny portions of it, because if they buy anything larger, it drives the price up. So they're creating a floor in the market, because if the price drops too low, they'll buy up until all the selling offers are met. But it's not just obviously South Korea, Thailand, it's all of Asia that's in this predicament. Utah Senator Mike Lee introduces legislation to treat gold and silver as money in the U.S. Obviously, Utah has already done this as a Utah law. There's legislation, I'm not aware of a lot of legislation going anywhere, but it's been proposed. It would be a good thing that we start treating gold and silver as money, take taxes off of it. The Constitution says gold and silver is money. The dollar is just supposed to represent an amount of silver. We've gotten so far from that we act like gold and silver is not money. Ben Bernanke won't admit it's money, but the Constitution of the United States says it's money. U.S. Treasury stole 10 coins from a family recently in the Northeast. They'd sent these into the Treasury for authentication that they were actually double legals, and the Treasury didn't send them back, said these were stolen. They had no proof of it, but there you go. Swiss Parliament to discuss introducing a new parallel currency of a gold franc. So they would keep their normal Swiss franc, but they would also have a gold franc. I think it's going to be debated in the fall. I don't know if anything will happen with that. Whoever comes out with the first gold-backed currency is going to win big time in this massive new currency war. I don't know, a year ago or so, Brazil sort of called off the currency war, but now we're seeing here, I think 2 days ago, as I'm making this video, Swiss put their interest rate down to 0 because they don't like the fact that they run their government books better than most countries, so money's flooding into the Swiss franc. It's driving up the value of the Swiss franc, and so they say it's hurting their economy. So we've got a new currency war beginning again, or a new round of the currency war beginning. Bretton Woods formula established the US dollar at worth 1/35 of an ounce of gold, so it's $35 an ounce. And if we use that same formula today, I saw a study on this, it's pretty interesting. The price would be $10,000 an ounce today if we used the Bretton Woods formula. So this is the main, this is kind of the, I think we're on what's so-called Bretton Woods 2 right now. But this is what the world powers that got together and came up with a formula to value their currencies. This is the formula they use. If you use that formula today, gold will be at $10,000. So it gives you kind of an idea. I think Hedge was looking at this and said if we measure by debt, the price would be $57,000. A bunch of people have come out recently, people that don't normally give prices on this, but I listen to a lot of King World News reports, and a lot of people who have come out and they'll pick a price like $5,000 or $15,000. A lot of times there's good rationale. You can use different reasons for coming up with a price that you think it's going to be. And a lot of people who have never really talked about that before have kind of jumped out there. Anyone who does that, we're all guessing. Well, for one, there's no real end date, so these things are always moving. But it's clear that the value is far higher than the $1,600, $1,650 number that we have on gold today for US dollar, because there's a finite amount of gold in the world. It's known as money throughout the world. US dollars are printed like they're going out of style. Through July, gold sales in India, and India is the biggest buyer of gold in the world, are up 23% in 2011. That's 206 tons that they bought in the first quarter. China was second at 143 tons in the first quarter. That totals almost 1,400 tons if you annualize it out of 4,000. Remember, I said 4,000 per year. So only 2 countries in the world, granted they're the 2 biggest, but are buying 1,400 out of 4,000 tons. It's getting sort of close to half of the gold that's produced in the world going to those 2 countries. And if you think about it, a lot of times people compare to the 1970s and the big run that gold had. Some people get nervous about the fact that gold is higher than $800 that it hit in 1980. But the dollar was a lot stronger then than it is now, so that number doesn't even matter. But also, the debt problems, the printing problems the United States has now compared to the 70s are totally different. The United States was a net creditor in that time. The United States now is the biggest debtor in the history of the world. And now, back in the 70s, you had U.S. and Western Europe buying gold. Now you have, well, yeah, the U.S. U.S. citizens could start buying it in the 70s, but many countries couldn't buy gold. And so you had China. China was back; they had no economy, so you had a lot of countries that either couldn't buy gold because it was illegal, or the economy was so poor they couldn't afford any. So here you have these countries like China and India and all of Asia who recognize gold as money. They revere gold, and now all of a sudden they have more money than we do, not per capita, but they're growing, they're expanding, and they want to own it. So if you try to compare what's going on now with what happened in the 70s, you need to think about those other factors, because the world is a very different place today. Let's see, there's a chart showing gold price and the debt ceiling. Hedge did this. This is pretty interesting. It showed just the correlation of, as the debt ceiling rises, how much gold stays in line with that. And so using that methodology, predicted gold would be at 1950 by the end of the year. It was just an interesting way of looking at it. Thanks, I hope you've enjoyed this video. I'll jump into what's going on in the world, which is very important to what's going on in the US as we speak. If you haven't watched the Coming Storm video, you can do that for free by the link provided. Thank you, God bless you.